Hey guys, welcome back to another episode of Shifting Gears. My name's Grayson Harris. That's Henry Byers over there. Say hi, Henry.
Hey, how's it going?
All right, good to go. Henry, it's been a slow July, man. It's also been really hot. Two of the worst things that can possibly happen. Slow news and also very hot. But our man Henry over here has been able to still find some interesting stuff for us. So without further ado, let's go ahead and send it over to you, Henry. What you looking at, man?
Well, first of all, you said slow news, but I'd say they're, in the freight market, sure. But I think, we had a presidential candidate,
Yeah.
an assassination attempt.
Yeah.
We've had the other one step down. So it's been quite a volatile set of news.
No, I missed
there,
all that, man.
No,
I don't know what
it's-
you're talking about. No, it's...
Well, the reason I'm joking about that is I do think that, what we're seeing in the data, it's a little bit wonky. I mean, typically post July 4th, you see, they call it really the summer doldrums. There's a bit of a lull season out, seasonally speaking. But I do think there's, something going on here in the last few weeks specifically where there's been this caution, this kind of wait and see approach. I mean, if you think about, how much your, company could be impacted by a presidential candidate or president. It's been a slow July for sure.
Right.
Post 4th, I mean, we saw a really good run up, the market tightening quite a bit, saw some signs of life. And I think it's important to kind of keep it into perspective where we're at. But at the same time, we really have to call it what it is. And it's been a very, slow July. I think a little bit slower than many thought, especially me coming off, such a run up to July 4th.
Right, but even with things being as slow as they are right now, there's always things working in the background and things that really just keep the freight cycle fresh. And I'm sure that's still been the case from what you've seen digging into some of the data. I'm sure there's still going to be some telling signs, right? Things that probably support your thesis from earlier, right? So,
absolutely.
So what are some of the things that you've noticed in July that you would still call interesting?
Yeah, I've gone from optimistic to maybe a tad bit more cautiously optimistic, if I could say that.
Yeah, that's fair.
I think the uncertainty surrounding the election maybe is having a little bit more of an impact than I had expected. Also, the oversupply. I mean, we're still dealing with quite a bit of carriers who we thought would have left by now. But I think from a rate perspective, let's just kind of put it into perspective where we're at. If we look at, the truckload index from FreightWaves, really is looking at dry van spot rates. And you look at the prediction for, early August, I mean, we're looking at, a pretty solid upward trend, right? So despite everything that happened in the second half of July, I mean, again, we were talking about the seasonality impact. We're still looking to move to really some of the highest we've been in the last year. But I think, from a capacity standpoint, if you look at rejection specifically in the dry van market, we'll be looking at some of the tightest conditions we've seen. And, it's not always perfect, the spot market and how spot rates perform, but the outbound tender rejection index is a solid leading indicator. So this would really basically be saying that we expect there to be some tightening here come next week, come early August, and I think we'll certainly see that. So I expect to see the market heating up,
right?
Come early August, and I think it could surprise to the upside, and I'll give some reasons behind that. But I think just put it into perspective. We're really nothing crazy I don't think is going to happen in the second half necessarily, but I do think we may still outperform expectations.
Yeah, and what are some of the things that you could point to that may be affecting that projection there that you're talking about? Like what would be giving it that boost?
In my mind, certainly imports. The reordering cycle that's going on is bound to have an impact. And I think with where we're at on a calendar year, we're looking at peak season typically for ocean freight, but that freight hasn't really arrived, in the scale that it's going to, or in the scope that it's going to. But I think, we're certainly looking at, demand from those imports, increasing quite a bit. And then we're having, typical truckload peak season is that holiday retail season. Yeah. So I think consumers are still showing amazing resilience. And I think that we're going to see truckload demand remain pretty strong through the end of this year, in my opinion.
Yeah, and this is a little bit of a tangent, but you mentioned consumer demand being strong. I read a story from Freight Caviar earlier this week. You and I kind of touched on it a little bit before we started filming, but Lineage, as a cold supply chain provider, warehouse company, they've got the largest IPO of the year, and I think that just sort of shows there's some other numbers that you can look at, but some of the other numbers that you can look at would be, for example, just consumer demand for, frozen food or perishable items has risen exponentially over the past 3, 4, 5 years. So I think that even, things like that still show that there is a very strong freight demand. Obviously, you can't have the biggest IPO without there being a pretty big demand for it, obviously. So what are some things, either from, for example, like cold supply chain storage, that's more of like the reefer side of things. But, what are some things that are going on either with reefer, flatbed, dry van? Like what are some of the more specific things that you're seeing from some of these different trailer types?
Yeah, absolutely. So we talk a lot about the dry van market. I mean, it's obviously the largest of the three when you talk about reefer and flatbed. And really when we're talking about the National Truckload Index, this is a dry van index. But when we look at the tender rejections across each mode, reefer, which is in green, I would say, in terms of the amount of freight that's getting rejected, the amount of contractual freight that's getting rejected by carriers, I think it's been pretty resilient here. I mean, while you've seen, dry van really taper off a bit and flatbeds, almost full on collapse in terms of rejections.
Yeah.
You're still seeing quite a bit of tightness in the reefer market, even though if you look at it versus, the last year, it's really nothing to write home about. But I do think it's something to note. And I think it's specifically with the Lineage IPO, it just really speaks to, the forward outlook for perishable items and demand and just, how the food industry is continuing to shift. And I think, regardless if we're importing it into the country, it's going to need to remain cold, right? I mean, those items cannot. So I think it's, in terms of cold storage, I really like the company. I think it's a solid investment for sure. And I think it's well positioned for some significant growth. But as far as the reefer market in general, this produce season wasn't, as robust as many had thought. But I think some of this may even be related to how hot it's been. Some of these items that are being, shipped can't get as hot as it's been. I mean, if you're sitting in a dry van, trailer, you can imagine how hot some of that product gets. Just imagine sitting in your car.
Yeah, if you're sitting in Arizona,
degree, exactly.
Yeah, if you're sitting in Arizona where it's it's hit close to 120 at points this year. I can't even imagine the amount of energy it would take for a refrigerated van to keep those perishable items from actually perishing in what has been one of the hottest summers that I can ever remember. And just for the people at home, what are the different colors here? I know you mentioned that green was reefer, but what are we looking at here with the orange and the white?
Yeah, so we're measuring the percentage of contractual freight that's being rejected by the carriers, that being an indicator of tightness in the market. Carriers, when the market tightens up, they'll reject more of that freight in search of opportunities in the spot market to chase spot rates, right? So we're talking about contractual rates and how much of that freight's being rejected. And I think what we've seen in housing specifically, this is in orange, is the flatbed tender rejection index. It's looking at carriers, kind of the headwinds that flatbed faces with homes, house building sentiment. It has turned a little bit more optimistic than it has, but with the Fed keeping interest rates higher, I mean, that's really hurting industrial production. And so carriers are looking to, on this last contract cycle, they perhaps have gotten rates that they now are willing to, commit to more often.
Right.
And certainly, from a demand perspective, the outlook doesn't look, quite as good as something like dry van, which is in white. Yeah. And then again, like we just talked about, reefer. But I think, reefer will probably trail off a bit. But if you look at, seasonality, it's likely to pick up back in some of the colder months when there's more freeze protection going on.
Right. I think this also kind of goes to show how seasonal trends can affect, the three major types, right? With dry van, pretty stable. But when you look at the reefer and flatbed, those are a lot more volatile and dependent on, not only seasonal trends, but, market conditions as well, like you mentioned with the, housing and interest rates and stuff like that. So I think it's interesting just to see that. Well, first of all, it's interesting to see that flatbed ever got that high when it comes to the tender outbound rejections. I haven't seen that one in a little bit. But what are some of the other things that you may want to look forward to, especially when it comes to dry van, since that's typically the most I guess representative.
Yeah, well, if you look at the market as a whole, I mean, this is going to blend all those modes together.
Oh, even better.
So basically, we're looking at, and many of you probably heard, Zach Strickland at FreightWaves talk about this quite a bit, following those 2019 trends, which we're slightly above, right? We're slightly more elevated, which I think if you think about, spot rates and coming off the bottom, I mean, I think we would expect to be a little bit stronger than 2019, which was, really the last,
Sure.
significant freight recession. So when you look at all these modes combined, again, I do think there's, some room for, rejections when we look at all these modes combined, to move a little bit higher, especially given the projections for spot rates. So we may see a gap start to spread between this year and 2019, which is in orange there, as we move into August.
Yeah.
But that's really why I wanted to point out, this in regards to van, because we've seen, if you look at that gap versus the all modes combined, we are staying a bit, tighter than we have and than we were in 2019. So I think the departure between this year and 2019, that gap could be wider for dry van specifically. 2020, 2023.
Yeah, that's 2023 down there.
2023, obviously it is. We're only looking back a year, but basically, I do think we could go above those levels, here in the next month to 2 months. And so it's going to be really interesting to see if the imports really have an impact like I think that they could. And if you look at, from a rate perspective, again, looking at the dry van market, dry van spot rates, you're already seeing that, right? You're already seeing this. This is just line haul only, right? So if you look at the downward pressure that fuel, having come down a bit, staying relatively flat here the last couple of weeks, we could be seeing, from the line haul perspective, rates, significantly departing from 2019. And even maybe reaching, where they were in 2023 here in just the next couple months, depending on how imports really do impact, spot rates in the dry van market.
Right. And I'm seeing a lot of people coming out after you, I might add. So I think you might have inspired some people here that they're starting to see some of the confidence in the freight market and really just the truckload market as a whole, making that leap or at least a gradual leap. Kind of as you mentioned there, does that really all pretty much just come down to the imports, or is there something else that may be affecting how this is sort of going?
No, that's a great point. This slide's perfect for that very reason. So you're talking about some of this, some of the larger carriers. They're obviously reporting on past quarter, performance, and you've really seen, contract rates stabilize, right? So they've been coming down. If you look at this white line, this is what that represents, contract rates. We're starting to see them kind of bottom out here in the last few months.
Right.
And so really a lot of that optimism is from that because there's really no other way but up for those.
Yeah.
But I think, absolutely. The imports being unexpectedly strong. I think when you look back to 2020, 2021, and you look at the impact that had on the dry van market specifically, I think there's a lot of reason to be optimistic when you do look at that, because you're looking at some really serious numbers from the import side, and a lot of that freight hasn't arrived yet.
Right.
So we're talking about where Port of Long Beach is reporting, being up for 40%.
Right.
For the month of June. Looking at loaded imports, I think you're still gonna see some very robust numbers for these ports. And again, looking at year over year could be somewhat misleading, but I think even in the context of the last 5 years, is some of the highest volumes that we're gonna see or that we've seen for even July and probably August and maybe even September, depending on how the IOTI, which measures freight leaving origins, continues, if it comes down or if it continues to remain elevated.
I think it's interesting you bring that up too, because we actually had someone comment on one of our clips on TikTok that works at either the Port of LA or Port of Long Beach. They're interchangeable, whatever. And he was saying that basically everything that you're saying is not only correct, but it's already happening. He's already saying, like, I'm struggling already to keep up with some of these imports that are coming in. Yeah. It's, for all intents and purposes, it's kind of already here, at least according to the one guy on TikTok. Yep. So what are some of the signs that you look to in the market to see when these imports are actually affecting the domestic truckload market? Does it are you looking more at like how much intermodal is taking over, like in terms of rail? Like, is it looking at rail and being like, okay, well, they can't handle this anymore, so now it's truck? Or is there something else that you're kind of looking forward to say, okay, cool, now the import boom is here and here's how it's affecting us? Yeah,
sure. So like once you see volumes really take off at origin, those are going to load on boats. How fast are those boats going to get here? So what I look at is transit times. I look at congestion at some of the major transshipment ports, because of a lot of those, much like LTL work in a hub and spoke network, that's actually become even more prevalent over the last couple of years as carriers have battled this quote unquote overcapacity.
Yeah.
I mean, I'm sure you've read stories about them ordering all these ships. They're getting bigger. Well, that should lead to some pretty serious overcapacity, but they've actually been able to balance this hub and spoke type of network a little bit better, especially with the things like the Red Sea. You're now getting freight pushed into even fewer corridors than it may have been. And so that causes a little bit of a traffic jam.
Right.
So we think about that traffic jam, we think about things piling up. Well, those ships now, as they arrive, are a little bit fuller than they were. Well, now that volume, this is what we saw when all those ships were off the West Coast. I don't think it'll be to that degree, but I do think you will see, because the ports have learned a lot about handle this big volume. We've also got some overcapacity from the drayage side. So you really have some really good things in place for this large volume, but it comes in and that traffic jam starts to now hit the port.
Yeah.
Well, there's only so many ways that freight can travel. It either loads on the rail or goes via drayage to a local warehouse. Or maybe a little bit further out, but regardless, uses drayage capacity. Those containers have to be on chassis. So you have two factors with it comes to that, right? Chassis, and you have the drayage providers, which is the truck carrying the container on the chassis. And so if you look at that, you're starting to think, okay, well, those guys are likely to be completely full. So what you want to look at is how long are those containers waiting there? So those containers, the dwell times, if they're waiting there, and so Project 44 provides Sonar with data surrounding how long those containers wait in the port. So as those containers come in, how many days on average each week. That's one thing I'm watching very, very closely. Like it had not gotten an update recently, and I was going back to them. We need this update. We need this because it's really one of those leading indicators that I look at. Because if this is true, this should be true. This should be true. I mean, we're relying on data points that are being measured from a third party, and the data that comes from behind all those shipments and everything. So. When you're looking at if these things are set up like they should, I've studied this and I created a lot of those indexes that track the ocean for them. You basically are wanting to see these dominoes fall. And so that's definitely what I'm looking for. But how that's going to impact the dry van market, and this is a very important one too, because when we're looking at if the bottom was achieved in May of 2023, we're on our upwards trajectory. That gap between spot and contract is closing essentially, right? And if we're expecting contract rates to basically stay flat, well, you're going to see some pressure on those contract rates with any movement upwards in the spot market. And so that's why I think when you look at the demand perspective, it's a really important metric because basically if that's been closing over the past year, we should expect, demand to be there in a way where it's kind of like we talk about the pot boiling. Well, to put pressure on the market, you really want to see demand remain strong.
Right.
If you look at all of the modes combined, it certainly didn't go as I anticipated in July. I thought these imports would have had more of an impact, but we're going to show some data points about the rail still managing quite a bit of volume, but there's still, we basically look over the last couple months, we're pretty flat.
Yeah.
We're down slightly, but I think even from a July perspective, we look at year over year, still relatively strong from a demand side. And so it's really the capacity side of things that's really, supply side that's putting really the downwards pressure on the market right now. But we'll talk a little bit about the load imbalances that could occur. But when you look at the dry van market specifically, we still, if we have imports hit the dry van market like I think they can, I do think we could see that white line move much closer to last year's numbers, which is the line just right above it. And you see from versus 2019, we're well above.
Sure.
And so a lot of these, the local haul, the city haul movements have been a big part of this. So you look at the shorter mile moves. If you look at the way, shippers have been, orienting their warehouses, a little bit closer to the consumers. That makes sense. But I do think these longer haul volumes, these mid haul volumes, these tweener volumes, they call them, which is really the middle between those. You're looking at the possibility that those segments of the market, and we saw this from July 4th. We talked about the rail out of Los Angeles kind of shifting over the dry van market. It happened in a big way.
Oh, yeah.
That trend will be another trend that I'm watching. It's kind of reverted back, but I think it could very easily reverse again, and I think it will due to the pressure that's building, the time delays, all these things. If the traffic jam, right? Like if you have a truck sitting in traffic for, like on I-15 or whatever, every day that's delayed is, it needs to be there to that end user so that the closer that deadline gets, the more it's delayed, the more urgent it becomes. Exactly. The more likely it's to load in a truck.
Yeah, it's kind of like interstate traffic in a way. A lot of times, I don't know if you've ever seen those videos, those time lapses of how traffic works on the interstate. but it almost infuriates you in a way because you look at it and you're like, why is this one section slowing down? Well, it's because one thing happened,
Right.
two things happened, and it put this little ripple in it, and then it will affect this one small area, and then the area that depends on that area in front of it, they're going to get affected, but then by that time, that area is already gone. So it's just this weird, like, it just kind of has to make its way through until eventually, finally, the ripple just
like
eases
going
its way
down
through.
75 South into Atlanta, where that 285, really where that exit is, which is the main bypass, right?
Oh,
which
yeah.
it hardly ever even tells you to take anymore, right? You mostly go through downtown if you're traveling through there because 285 is a nightmare.
Yeah.
But you come over a hill, and just like you're saying, it's just the fact that you can't see far enough in front of you, people start to slow down. And just like you're saying, that's a great example because if you start to slow at transshipment ports, your transit times get a little longer. Well, when you finally all get to your destination, it's going to be maybe even more of a traffic jam because if each one of those was like an interstate and you're congested here, well, you're going to be congested at the port, and then the carriers are going to be overloaded because there's too many containers in the port. So really, we're looking at a really good scenario or a good environment heading into the second half. Reasons to be optimistic. Again, cautious, maybe a little bit more cautious than I was heading into July 4th. I think I had a lot of reasons to think some strength was happening from the import side. But I do think, if that was to happen, here in August, I think we're going to see some really ripe conditions for the market to overperform because of the holiday retail season and the deadlines. They're now super close, right?
Sure.
I mean, my wife was saying she went to Sam's Club the other day and there's already Halloween stuff out. And you can imagine how far in advance.
Surprised there's not Christmas stuff out.
Hey, it just speaks to how early that stuff needs to be here and reasons why those deadlines could create more urgency.
Yeah. So I had a question about this graph. Is there any significance to this year sort of being closer to the median of the last 5 years? So I guess my question would be, is this our new normal here, or is this closer to what the historical average has always been?
This is very close, I think, to our new normal. If you look at the compounding annual growth rate of just freight demand, you're usually looking at about a 3 to 4%. I mean, you look at GDP even, right? I mean, those are really healthy GDP numbers, but I think from a demand perspective, you look at how freight and just in time management, e-commerce. I mean, I think all those things combine in a way where freight demand just continues to grow. And I think this is, at least for the short term, this is very, very much close to our new normal. And I don't think we've seen quite the impact from imports that we're going to see.
Oh, of course.
And so if you look at just this year, I think it's a great point, actually, why this would be kind of like a new normal.
I got you. I was wondering there because I'm like, damn, that's smack dab in the middle. So I was...
Yeah. No, it's a good example. But I think you think about it in context of like, where 2020 was, 2019 was. I mean, you think about last year, really the years to be not disregarding, but you view as exceptions. It's the back half of 2020, 2021, and then the front end of 2022, right? Which I think is very much shown very clearly here. Got to talk about this, right?
Yeah.
I mean, the supply side of what's happening in the truckload sector is beyond significant. FreightWaves had done an article about those SBA loans, the reasons why they were probably able to help out carriers and help them hang on. I think it has to be part of that equation, right?
Oh, it has to be.
You talk about from July of 2022, an average of 348 carriers leaving. This is looking at the net changes, right? I mean, there's still carriers coming online. Sure. And I think here you saw maybe a tiny bit of optimism, but really, we're talking about the conditions here in the last month. I mean, you've seen some more stories about bankruptcies. Every month that goes by without some type of recovery could lead to more carriers exiting. And then even, if the freight market were to turn up briefly for a few months, which we're expecting, it may be balanced in a way where those carriers maybe aren't optimized to take advantage of that. Because you're talking about maybe longer haul miles. You're talking about having the data to really understand how that works and the network to be able to pull off, taking advantage of an upswing like that.
Right, but I still think, as we mentioned in the last episode, I still believe it's very significant that we haven't seen this incredible downturn in the way that we saw this incredible upturn. It's not like there's a equal and opposite reaction situation. It has not been equal. It has been opposite, but it has not been equal. And I think as we mentioned with the FreightWaves article talking about the small business loans, I can't put my finger on much of anything else in terms of now. Obviously, we could be like, oh well, they just really wanted to stay. They were super optimistic about it. They just made it work. Well, how?
Right.
That you have to have some money if you're not getting any production out of this truck you just bought.
Right.
So how are they paying for it? Well, I mean, you put those two things together, it makes a pretty compelling case.
Well, let's think about just demand, right? Demand's there. I mean, we're basically saying that there is an increase of demand, a significant increase of demand over, now relative to the last 5 years, not as much, but relative to last year.
Oh, yeah.
So when you think about that demand has, and it's been consumer demand that's been really the driver of that, right? Consumers remaining incredibly resilient despite the interest rates has overperformed almost everyone's expectations at this point. I mean, so if you talk about consumers hanging on, plus the SBA loans, I mean, you're talking about, because it's been a pretty miserable rate environment. We talk about it bottoming in 2023. It's getting better, but it's certainly rates, have not had that volatility that they would normally have given the amount of volume because of just this, right? It's the supply side that's been weighing the market down. So any more significant bleed off of these carriers, and you'll start to see more volatility in the truckload sector. And I think your reason for optimism is because even if we go positive a couple months and demand goes to a level where you do see positive rate movements and those carriers hang on even longer, if you think about the ones that are not as financially solvent as the others, we're talking about it will happen eventually.
Yeah.
And so the point on that FreightWaves article was more about the downstream impacts that this could have. There could be a very significant capacity bleed off whenever these SBA loans come due. Maybe the IRS, which they've been turned over to the IRS and the Treasury Department, they start to pursue these loans outright. You could talk about a couple of quarters where a lot of carriers go out of business. And so just to talk about the imports, the front loading, I mean, we're talking about maybe potentially the backside of that cycle and what that looks like. So these are all things to consider when we're talking about the optimism regarding the second half.
And with us being in an election year, you would imagine that not only us being in the election year is going to change things, but what new or existing mandates and loans and things of that nature could come with either a change in the office or whatever may happen there. With the government basically getting turned around a little bit and people coming in and out, I would imagine that's probably going to have a little bit of an impact on it as well. So there are so many things that are impacting that number right there. But I do think that's one of the more interesting things to look at.
It
is the net number of carriers, because that really just shows not only how healthy the freight market is, but how healthy it is just to actually be participating in it.
And so you talk about the administration. I mean, I do think about, when you think about this index here, it's measuring all imports from all countries coming to the U.S. Very much the leading indicator to be looking at right now. It's really going to show you demand where most people who aren't privy to this index would not know. It would be kind of speculation.
Right.
The National Retail Federation does like a forward projection. They may have some data that's similar to this, but I think when you think about the optimism, they're probably measuring it more on like consumer demand, inventory cycles, things like that, which is a good way to look at it. But this is really the proof in the pudding. I mean, this is really when the rubber meets the road, not to be using all these, what do they call them? Idioms.
Chomping at the bit, keep the blinders on.
But the front loading that could be occurring here, just the reordering cycle is one factor. There's some concerns about, again, the administration and, a trade war with China heating back up.
Right. And
then just, the volatility of the election. I mean, having a little bit more inventory on hand maybe a little bit smarter move, because if you don't and consumer demand remains high, then you may not be able to take advantage of that. And so this we've really been playing with the most robust import cycle that we've seen. We've just turned positive over both of those for this point in time.
Yeah.
Now we're kind of battling that level. If this continues, we will be above those levels, but that speaks to a more traditional peak season as well.
Yeah.
Typically, you would see, July, August, the freight should be here by September. So if you look at the transit time involved with these, even if we remain strong during the first couple of weeks in August, you would expect to start to see it taper off a bit.
Right.
Again, you look at the seasonality, even with the bigger years. I mean, there's very clear seasonality with ocean freight, even if there was front loading in the first half or the consumer demand. Basically, most companies always expect there to be a decline because they've got freight here now. They're going to service that holiday retail season, and then they're looking forward maybe to next Chinese New Year to bring more freight in.
It almost looks, based on this graph, that there are 2, maybe 3 big reordering cycles throughout the year. I mean, you tell me if I'm off base on this, but this makes sense that it would taper off coming down towards the second half of the year, because if you want something here for holiday season, you order it now or months prior, basically. Like, it's already ordered if it's going to get here for the holiday season. What is this big jump right here that we see between February and March?
That's how much of an impact Chinese New Year can have.
That's Chinese
really,
New Year, of course.
You're looking at, so the green line is really important because it talks about the inventory glut. You may go back, back to 2022. You're looking at Target saying we've got too much inventory. Walmart's got too much inventory. Well, what do you do? And this is really the bullwhip cycle, is what your bullwhip effect. Mm-hmm. You got too much inventory, you stop ordering, right? So you see it trail off. But this year is very much a return. You talk about the new normal.
Sure.
This is very, like, we haven't experienced the typical peak season in quite some time in the ocean industry. You look at the trade war. There was some front loading going on during 2019, even during the tail end of Trump's presidency. But you got pre-Chinese New Year. I mean, that's basically saying that consumer demand stayed a little higher than most expected. We need to order some more freight. That got us through, May. Now we're talking about consumer demand staying relatively elevated. Then you've got all these back half, election concerns, potential trade war, and then just consumer demand and it looking like a pretty robust retail holiday season.
Yeah.
So all that combined is now looking at, what we're seeing in imports. And, this is looking at departing imports. So even some congestion factors measuring in here. You've had the Red Sea, a lot of things combining there to create this robust peak season. But I think that it may be a little earlier than traditionally it would have been due to the front loading nature. But I think the size of that, is very much, a typical peak season, which we have not seen that. You'd have to go back to probably 2017 to even look at what that would normally look like. So seasonality that almost always occurs, pre-Chinese New Year, you're looking at the tail half of the year, or the tail end of the year, Q4 really. Very interesting, chart here, and it speaks to the amount of freight that's headed this way.
Yeah, I would agree. And would you expect this year's numbers to sort of stay in line with, 2022 and 2021, or are we expecting maybe to possibly outdo it?
For the next couple quarters, or for the next quarter specifically?
I would say for the back half.
I do think we could overperform those years. I do think that. I think specifically in the next quarter we will.
Sure.
You look at the freight arriving, I do think from a port perspective and how those ports register those numbers, I think you're going to see some really strong year-over-year numbers for the next couple months. And you're really going to see them talk about, Q3 was, the performance for Q3.
Right.
Even though, like you're saying, Q4 could even be, stronger compared to years past. And I think they'll certainly, you see a lot of publicity, PR. It's good PR for the ports to be talking about it like that. But I think, we look at the transit times for the West Coast versus the East Coast. Now we're talking about things like labor disputes on the East Coast and those concerns, which we should have talked about. But I don't think that's playing as much of a factor as all the others, even though it's starting to. I'd be remiss if I didn't mention that. But I think, the freight, and talking about it being as high as it is, when that will arrive, we're still looking at, from the last data point, still looking at 20 to 30 days before that really hits the port. So we're talking about the traffic jam.
Yeah.
It's already occurring, like your guy's saying on TikTok. I mean, I've heard that from elsewhere, right?
Sure.
But it's also one of those things where the market kind of confirms boots on the ground. When you start to hear that, you start to really, see the proof in the pudding that it's actually happening.
And speaking of boots on the ground, kind of touching on what you mentioned the possible work stoppage in the ports. Just for anybody who doesn't really know, basically the International Longshoremen Association Union, they've already basically come out and said, listen, if we can't get a deal done by the end of September, pretty much everybody on the East Coast and Gulf Coast is going to be going on strike. That could be something that we really need to keep an eye on. We'll cover it more as it gets closer. There's not really much to go over now, just because it's, they've just sort of thrown out their threats and their wants and their needs. So we'll keep an eye on kind of how that goes. But yeah, I do think that's something that, as we approach Q4, especially if that's still a possibility to keep an eye on, because obviously any major work stoppage is going to have a huge effect, but especially if you're talking about basically the entire East Coast and Gulf Coast. I mean, that could be, that's tens of thousands of workers.
Well, do you think about the deadlines and we talk about peak season? Well, if you look at, West Coast volumes are likely to peak before East Coast.
Oh yeah.
So the East Coast volumes, and that what you're alluding to, will probably keep the strength in this number. If it stays high, it will be largely attributed to those East Coast volumes, because there are some numbers, if you look at rates, West Coast rates have already started to decline significantly. Now they were already, depending on who you ask, very, very high. Looking at how the carriers and how few control capacity on the water. I mean, you are looking at some spot rates that are way overperforming expectations at this point, even regardless of how much demand's increased. I mean, we're talking about, and that's really talking about, capacity. I mean, we have charts to really represent almost all this, right? So the white line here is looking at the amount of congestion in the transshipment ports. The more congestion, the more likely that freight's to be rolled over from one vessel to the next. So basically, I was wanting to catch this plane, didn't make it on time. Now I'm catching the next plane. You can imagine that starts to build up quite a bit.
Exactly.
It's like good examples, Delta. Look at Atlanta when the outage happened. I mean, all those people are now having to catch the next flights. So it just keeps compounding essentially. Right. We'll look at capacity in red. This is representing global TU capacity. You hear carriers talk about ordering more ships. You see the order books. You see there's a ripe environment for more capacity. It just speaks to how well they're controlling that capacity in the face of demand.
Yeah.
So if you're looking at it purely objectively here, which you probably should, right? I mean, we can all theorize about, how they control spot rates and rates overall, but at the end of the day, this is how much capacity is actually leaving the ports. It's an objective view of capacity. So part of it, if you look at how it's trending versus traffic jam, which is the port rollover index, the congestion.
Pretty high.
You would expect it to go down as it goes up.
But
you see what I'm saying? Yeah. So it's like it's not a direct inverse, but you basically look. It definitely has a negative correlation, as it should.
It's interesting.
But we're looking at a period where there's more ships on the water, there's more capacity potentially or theoretically available, but yet we're looking at some of the lowest numbers we've seen since before the pandemic. And I would say that probably the beginning of this year is maybe a new normal once this kind of reverts back. Yeah. But I do think carriers are managing capacity more effectively. So that you have to go into what that means. But it's essentially what they're saying is they're causing less available capacity to be actually calling the ports at a specific time. Therefore, decreasing capacity in a way that helps them control those rate movements.
And they've had to learn how to balance those things over the last few years. Exactly. I guess that kind of goes back again to the new normal that I was talking about is, a lot of times it may not even show up in some of the numbers because people were just getting better at dealing with it. Like that could be another thing too is, okay, we've learned over the last 3-4 years not to make these mistakes with capacity or volume or whatever, so let's just not make those again. Yeah. And I think that might be helping out.
Okay, let's just say there were 9 trucking companies that had all of the dry van capacity, and they figured, okay, well, if we drop trailers in a specific part of the country and we start operating in this really fixed drop pull hub and spoke type of way, well, they can just park more of those trucks, or they can just what's happening at those yards is anybody so it's one of those things where they can control capacity in a way where they maybe were caught off guard by the surge in demand. So that maybe this is we are seeing a more objective view of how rates can fluctuate given the current environment, especially with the Red Sea and not being able to navigate the Suez Canal.
Right.
The new normal is carriers managing capacity in an extremely effective way, where it's going to be hard for shippers to call them on any type of manipulation, because it's one of those things where this is, over the last couple of years, this is how it's set up now. So if demand surges off the map, which has been, May was the highest container volume on the water, ever. I mean, it would still say that they may not add that much back because if you look at how that's influenced pricing, that's pretty advantageous for those guys is to be making that much money in the spot market.
I would imagine so. I got you. What else you got for us?
Well, just the container rates. Looking at East Coast versus West Coast. East Coast from China and East Asia is in green. China and East Asia to the West Coast is in white. Right. We talked about it peaking. The spread between these two, you're looking at the cost effectiveness of, should I go East Coast, should I go West Coast? You may start to see some more volume go back West Coast because of this rate remaining high and them taking advantage of that. But in my mind, they're so high, it's not that much of a difference considering how high they are, that you may see this East Coast number maintain some strength where the West Coast might drop off. But in terms of volumes, we talked about that East Coast kind of carrying that demand. We'll see. But most people suspect, and now that this data is readily available in container futures are actually trading, most of the quant type of hedge fund guys or whoever would be looking at this and saying, okay, they've likely peaked. The chances that they've peaked are high. And so I'm looking at that going, it's probably true. We probably have reached some of the highest levels that we'll see, but I think there's maybe a little bit more strength there that's maybe going to continue for the next couple of weeks.
Sure.
So we still got, looking at when that arrives, a month, 2 months of that arriving.
I got you. Yeah, I think even looking like way further down the barrel as well. For example, if Trump is elected president again, he's already talked about more tariffs on Chinese imports and things of that nature. So I think it'd be interesting to see, how that may affect the West Coast, not just rates, but just capacity and volume as a whole. I mean, that could fundamentally change some of the ways that they have to operate. And then obviously we've got towards the second half of the year, the possibility of a work stoppage with the East Coast ports. So that could have a big effect on it as well. So regardless, over the next few months, there's going to be some very interesting things happening around both West and East Coast ports, depending on just sort of how the dominoes fall. So
Sure.
Definitely keep an eye on that, and we'll, get more into it as it gets closer, but just something to kind of wait and see,
For sure. And the West Coast, we have to talk about just kind of how this is going to play out. The West Coast on the rails is in my mind, a very, they could be overly exposed to the international freight.
Right.
If you look at the white line that's representing loaded international container volumes, pushing some of the highest levels we've seen even during the big boom in demand. Yellow is the empty containers. This is all U.S. international container volume, loaded in white, empty in yellow. The highest levels we've seen ever in empty. That's talks about the container imbalance. You talk about all these containers being in one place, need to be in another. They need to move those around. The rail is still handling a lot of this repositioning. To me, very much talking about like being at peak capacity on the rails. So if any spillover, any increase in demand, we talk about that traffic jam, the rails maybe will be less likely to accommodate it because of the urgency involved in that volume. Looking at Los Angeles specifically, same thing. White is loaded coming out of Los Angeles market. This is actually looking at the amount of containers going back into the Los Angeles market empty.
Yeah.
So think about places like Chicago, these inland, those containers are going to get unloaded. This really looks at how, what are carriers thinking about future demand overseas back in East Asia?
Yeah.
Because Los Angeles is going to be the place they're going to want to load those and get those back over empty. We're looking at, in green, those empty containers still remaining relatively strong.
Right.
So there's still some demand to be had, in my opinion. Now, this will stay high. Even if demand drops off at origin, there's still some containers that need to get back there for the next. It still happens. But so this could be at a point where it's maybe have already peaked overseas.
Yeah.
But we're still seeing this in green peak, which is the empty containers going back over there. But in white, look at that. Where the rails had dropped off some of that volume before July 4th, we talked about the long haul moves. They're back to where they were. They're actually beating those levels. We're seeing some of the highest outbound loaded container volumes ever out of Los Angeles. And that to me just says the urgency around those volumes as they come in, the more backed up they get, the rail's likely to service fail. And it's, if you look at the amount of time it takes, 7 to 10 days to get inland, you can get the truck there in 2 to 3. You're going to choose a truck when your customer's on the line. Your deadlines are really approaching fast.
Is this kind of your tsunami of freight that you mentioned last time?
Well, it certainly.
Yeah.
Yeah,
you think
absolutely.
So?
No. It's your guys talking about the ports already being congested. That tsunami's here.
Yeah.
How and it's still there's still more to come. So the aftershocks obviously we're talking about, and so if we're already here with the tsunami beginning, then as that tsunami continues to come and push ashore, will this be a number that drops off? And in my mind, the closer we move to those deadlines, if you don't have your freight in the warehouse by like early September, they say that you're not there in enough time for peak holiday retail season, Black Friday, whatever. Because look at the time. It seems like earlier and earlier every year we're looking at these. They're trying to push products earlier.
Yeah.
Already Halloween stuff in the stores. I mean, it's really no surprise based on what we've seen in the last couple of years. And I think those expectations about when those goods should arrive. We're already looking at that urgency beginning. So the tsunami of urgency may be the next thing to happen.
Tsunami of urgency.
Container dwell times, keep looking at them.
Yeah.
Los Angeles, they continue to stay high. We talk about the capacity that they have. They're managing it quite well, in my opinion. Look at it relative to the last couple of years. We're going to see this being, some of the higher levels for consecutive weeks. You're also seeing places like New York trend up. We're talking about volumes are now arriving at all of these major ports, and they're positioned to arrive in a big way to the East Coast now. So this could be something to watch, because if they do become overloaded, those containers wait longer, this will be an index that directly reflects that. And I think we could see some of these weeks hitting around 6 days.
Yeah.
And that, again, will just speak to the amount of delays that these shippers are incurring
Exactly.
and how critical it is for them to get that freight there. And I think one thing interesting to note, you talk about bills of lading and how much containers are on a bill of lading. When risk is high, the amount of containers per bill of lading goes down because the more those containers are caught up in customs, we're talking about the trade war. If you have 50 containers on a bill of lading and one container has an examination, all those are waiting. So we've seen a huge push of shipments, record levels on the inbound ocean index, looking at shipments, but it's the TEUs in those shipments that's going to really impact
Sure.
the truckload sector. And so even though there's all these bills of lading, there's still the amount of containers per bill of lading is down. So you really need to be looking at the true volumes. But this is one thing that'll be directly impacted by the amount of container volume that's in the port.
Yeah, that makes sense. Like you mentioned earlier, I think dwell times is going to be an interesting one to look at, just to see, basically how much stuff is just waiting to get moved on a truck.
And if you're an exporter, this is port of discharge, looking at imports. On the port of lading side, these ports care massively about the import. Think about the trade imbalance.
Yeah.
It's one of those things where the exporters, the higher demand goes on the import side, the more likely exporters are to get the raw deal and get delayed and things like that. So it'll be interesting to watch this data set specifically in the next couple of weeks.
So Henry, what is the one thing that you want people to kind of take home from today's episode? What are some of the things that they need to look forward to over the next couple months? What does it mean maybe that July wasn't as crazy as, maybe we thought it would be, or whatever the case may be? Like, what are the big things you want people to take home from today's episode?
Post July 4th, return to seasonality, the summer doldrums. I mean, whatever you want to call it, it seasonally speaking, it's usually a down period. I think the lead up to the July 4th was something to note because of how quickly, carriers and freight can become imbalanced in the network, and how much an import surge could cause that. And so a lot of those key indicators we were looking at on the Southern California and the West Coast, at large, was really pointing to the freight market could become volatile pretty quick.
Yeah.
Now you're talking about a hurricane potentially forming. There's a 60% chance of one becoming a tropical depression here shortly. Another hurricane. I mean, these are things that can really impact the freight market quickly. And I think we're showing from the import side, demand will certainly be there. Urgency will be there. There's all these factors that if the right opportunity presents itself in the right moment, we still like that pot on the kettle.
Yeah.
It could overflow. Now, will it be as exaggerated? It will be a bull run that will continue for months. I think we're saying that it won't be, but it will overperform expectations in the second half. And I still feel very confident in that.
Yeah. Just waiting to see what lights the fuse, and then also kind of see what that fuse is attached to. Is it going to be attached to a nuclear bomb or a firecracker?
Right, right.
That's kind of what we're looking forward to over the next, couple weeks, months, as we see kind of how things shake out for the second half of the year. Yep. So if you guys want to stay in the know of what's going on in the freight market right now and get some of these in-depth insights from your boy Henry Byers over here, go check out our description, man. We got all the social media channels where we post some of these clips and some other things that are happening in the freight market world. Of course, we also have a website. If you're looking to get anything moved, you can get a quote down there from us. In the meantime, though, thank you guys for watching, and we will catch you all next time. Bye.
Bye.